Adrian, how's it going? Hope is all as well. Oh, good. Couple more people joining now. Okay, guys, if you want to so we automatically have you guys on mute. We'll get started probably at 1 past or something like that. We're hopefully expecting 30 or 40 attendees, which should be good. For those that haven't met him, this handsome man here is Simon Odell, but we will kick into the intro shortly. I'm going to put everyone on mute shortly. Thanks. Okay, it's 12:30. We'll just give people a minute or two to join. See a couple of familiar names in the list. Do you have access to the attendee list, Simon?
Yeah.
Okay.
You're still in lockdown down in Melbourne, mate?
Yeah, it restarted again last night. If you see that video about the people in the engagement party, it's just blown up again here. But I saw Sydney is going even worse for those that are in Sydney. Some pretty bad numbers today.
Yeah. That's horrible.
Thank you, lucky stars, you're in Coffs Harbour.
Yeah, but they still locked us down. The whole state's in lockdown now, so yeah, but there's no cases here locally, which is good. Touch wood.
Definitely. Yeah, no, I reckon that all the case numbers now are coming good from the protests from 2 weeks ago. That's where the real spike, I imagine, is going to start coming from. All right, good. The ever important COVID update at the beginning of every call like this. Okay, cool. We got 10 people here. Like, I'd expect another 10 or so to start joining. It is just on 12:30, so we'll get started. So first of all, welcome everybody. Thank you for joining. Again, my name is Andrew Wong, the founder of KOBA Insurance. Just a couple of quick housekeeping things before we get started in terms of timeline. The crowdfund goes for another 7 days. So if you know anyone that's interested or wants to be part of this, please, by all means, let them know. For those of you guys that have logged on and expressed interest, you do actually get a referral code. If you share that referral code with some of your friends, I believe there's a small kickback in like a percentage or 2% of what they put in, you get back. So it's a fun little referral part there. Also, a share offer document, or rather a draft share offer document, will start to circulate the beginning of next week for you guys to take a look, with the goal of either running the offer at the end of the week or early the week after, still to be determined. But we are definitely looking. I've been able to speak to about, give or take, 50 people in the high net worth category, all who seem pretty excited, all who have a bunch of really interesting questions, a good level of people who are both insurance professionals and ask pretty in-depth questions and comparisons against other global businesses, and then a bunch of people who are also very specifically startup investors. And I'm actually really excited to talk to a lot of the guys who this is probably their second or third or fourth startup investment, and they're really making it part of their portfolio. And I personally have always been a startup investor, and I think it's an absolutely fantastic place to have a component of your portfolio. Obviously part of your portfolio, not your entire portfolio, because this is definitely the high risk game. But like anything, this is a bit more fun, a bit more engaging, a bit more interesting, And for me, definitely something that has been part of my life for a good number of years. So the man that we have here is Simon O'Dell. He also has been in the startup game for quite a long time. I will ultimately let him introduce himself shortly, but I wanted to make sure that we had someone who was kind of external of the KOBA business. Simon graciously has invested in us what ends up being about a year ago from his fund and from his accelerator. He'll tell you a little bit about that as a background and his background there. But I wanted to make sure that we had, so Insurtech as a whole, as a industry, is really interesting. There's lots of changes happening. It's lots of changes happening locally, and there's lots of changes happening globally. And so what we wanted to do was make sure that we had someone with a really qualified point of view to help you guys understand what's going on in the greater industry, to understand and measure Insurtech as a category versus other startup categories, to understand whether this is a good, bad, ugly, indifferent type of investment. So without any further, Simon, can you maybe just give us a little intro about yourself? Right, tell us who you are, where you've been, what makes you qualified to give us a bit of an opinion, and then tell us maybe a little bit about Insurtech Gateway.
Yeah, sure. Thanks, mate. Hopefully I'm qualified to give it an opinion. So yeah, I came from about 10 years experience, insurance domain experience, and then dropped out to be an Insurtech founder myself. So I was a part of what you might describe as the first wave of Insurtech in Australia, which was around 2014. The Insurtech community, even the fintech community in 2014, was not as developed and mature as it is now. There wasn't much support around then. So yeah, we struggled to, after a successful pilot, raise capital, a meaningful amount of capital. So once I managed to exit that business a little bit gracefully, I guess, yeah, I had a fairly strong resolve to try and help build up the ecosystem so that others didn't necessarily have that level of experience, and looking at having experienced the Insurtech and fintech community in California and other areas through that time of being a founder, I realized that Sydney/Australia was pretty far behind. So I partnered with some other entrepreneurs to create Insurtech Australia, a not-for-profit member association, and the purpose was to activate and build the Insurtech ecosystem here in Australia. And in activating and building the Insurtech startup community, it was the first phase. There's actually a lot of theory around developing startup communities. So we prescribed to this theory that again comes out of the US, which says that the first phase of 4 main phases is around local connectedness. So we pulled together investors from around Australia, the regulators, government, the incumbents, and also Insurtech founders and other service providers, and really created all these forums whereby they could connect and collaborate, and we'd facilitate partnerships and so on. So that was, I guess, a big part of helping to drive the Insurtech community forward here in Australia. That organisation now is doing quite well. It represents about 30 partners from around Australia, so about 30 incumbents, like Macquarie Bank, down to all the insurers, so your Suncorps and QBEs and so on. And I believe they represent about 80 startups, Insurtech startups now, and so on. So there's a lot more support in the ecosystem now, which is great. It was through that process, moving from local connectedness to global connectedness, where we send a delegation. We used to send a delegation overseas every year. That's a bit of a strange thing to think about these days, but we used to send about 10 per year, 10 Insurtech founders and 20 of Australia's leading insurance executives over to the EU and UK on a delegation every year, so they could see how the ecosystem over there was operating more effectively. They were more mature and more advanced. For example, Allianz in Germany has a $1 billion corporate venture capital fund. In Australia at that point in time, Allianz didn't really have an Insurtech strategy. I shouldn't single them out, but just by way of example. So yeah, it's kind of almost going into the future, going over into some of these markets, at least it was back then. And it was through that experience in the UK that I met the Gateway crew. So Insurtech Gateway in the UK. So they're a private enterprise, essentially an incubator and a fund. They set up the world's first independent regulated incubator, which is essentially a platform to help early stage founders to be able to access or launch an idea, a product in the insurance industry in a significantly de-risked way. Yeah, and I'm sure we'll get into some more around that later on in the chat, but that's a bit of background.
Great, cool. So can you tell us, well, let's dig into that a little bit. Tell us about what your Insurtech Gateway program is doing here locally, right? What type of investments are you seeing? What type of startups are you seeing? Tell us a little bit about the local Australian Insurtech space.
Yeah, sure. So the local startup space is thriving at the moment. I'm happy to say we see about 200 or about between 200 and 250 pitch decks a year at the moment, based on the current rate of aspiring Insurtech founders. They might be insurance execs seeking to drop out and launch their own startup. Dan Fogarty is a good example of that. He was the CEO of Zurich Australia, and now he's the founder of a startup. So yeah, it's quite a thriving scene. We've got a very large finance sector here in Australia, so it represents about 10% of our GDP, which is scale bigger than you would see in a lot of other markets like Hong Kong and Singapore. So we've got a fairly large local industry. So it's quite a compelling market, both for founders and investors. So yeah, we're seeing more founders popping up to solve some of the unique problems that Australia has to solve.
Okay, cool. And what are some of the kind of new startups you're seeing? Like, give us a taste of what's out there. Is it agency businesses like KOBA? Is it tech businesses? Like, what are you seeing out there, and where do the trends seem to land?
Yeah, so one of the most common business models that an Insurtech will deploy is that of a managing agent, which is the same model as yourself, which is it's a really attractive model because you can introduce a product directly with the customer or a B2B2C via a distribution partner. However, you can access low-cost distribution, I guess. But you don't necessarily obviously take on the capital risk that is down to the insurer, but you can still have that consumer transaction where you've got that frequent transaction with the consumer, which generally VCs like as well. You're churning through premium and transactions on a regular basis, which lends to scale. It means you can scale quite quickly, and it's also a model where you can introduce fairly innovative products quite quickly because you don't take on that capital risk. And likewise for the insurer, it's quite difficult for them to be able to introduce a new product in the market at times because of risk in A, potentially cannibalizing their current portfolio, or B, just the rigid nature of having a large incumbent business. So they like partnering with MGAs, Insurtech MGAs, because they're nimble, they're able to build quite innovative tech to be able to create a better UX and maybe even product innovation for the consumers as well. And your Insurtech is a good example of that. In terms of B2B type models, Geolocata, one of our portfolio companies, is in a space that we're seeing a fair few startups right now, which is around geospatial data and using, say, satellite and terrestrial data and other sources of geospatial data to be able to create a more granular understanding of risk profiles. So that can be utilized to price risk more accurately, or identify those consumers that align with your kind of risk appetite, and therefore get better performance in your underwriting business, I guess. So less claims, lower frequency and lower severity. And just rounding that out, Geolocata are also helping by deploying some of their sensor assets following a natural catastrophe to be able to capture some of the information following a natural catastrophe, so that insurers can settle claims quite quickly, so they can use basically they send in their sensors, drones and so on, and they process that information so they can identify total losses, say householders claims, total losses, sometimes before the claimants even know that they've had that loss because they've evacuated, in a matter of days, as opposed to at the moment it takes a lot longer than that.
Very cool. So if I'm hearing you correctly, some of the trends from the local industry are managing general agencies. So, taking on the consumer or business operating model. There's sounds like KOBA is very much a data play, right? And enriching better data profiles and pricing and things like that. I imagine software and building claims tech and policy management is probably another one. I guess these days tech is in every industry, right? There's always new startups in tech. Are there any others? Is there any others in the kind of those three?
I guess Australian specific problems are around those natural catastrophes, and we see that realised in companies like Geo, but also companies like Vayu out of California, who are trying to build the world's best bushfire risk model. So we're actually seeing the scenario is such that we're seeing a lot of founders from other industries and scientists like climate scientists, neurologists and so on, who are looking at the insurance industry, which has kind of got the task of solving a lot of the world's problems at the moment. If you think about some of our macro problems, like even the pandemic, the climate change, cybercrime, people displacement and worker exploitation and so on, a lot of those problems can be solved with insurance type disciplines. And I guess the message there is there's a lot of founders from other verticals who are coming to insurance to be able to solve some of those problems and create solutions. So the neuroscientists and AI engineers and so on are creating bushfire risk models so they can understand bushfire behaviour more accurately and help to price different risks that they otherwise wouldn't be able to price and so on.
So that's interesting. So tell me, why do you think these data scientists, these neuroscientists, and people from outside of insurance are coming into the space to solve the problems? Like, why aren't the big guys, why aren't the big incumbents, the IAGs, the Suncorps, why aren't they trying to solve these problems?
It's a good question. I guess the first part of the question, they're coming into the industry because there's a lot of venture money in the industry now. We're seeing a lot of IPOs of successful Insurtechs that have been through the full cycle, and therefore we're seeing a lot more funding, and you can see that in the numbers. I think, what was it, 7.2 billion USD in the first half of this year, which is more than the full year, calendar year last year. So the rate of funding growth is growing exponentially, and I guess VCs, Insurtech has been put on the map because they can see that there's some really good exit events happening, and they're cashing out and realizing these multiples that are equivalent, if not better, than fintech and other verticals. So they're moving in knowing that the money's there. They're moving in knowing that their skill sets can be applied to solve certain problems in the industry. And when you've got a problem profile of where it's mandatory to solve, think about bushfires for a minute, mandatory to solve, expensive to solve, and there's a lot of stakeholders who are willing to pay a lot of money to solve it, then that profile generally is quite attractive, reading from the startup playbook. So hence why there's a fair bit of attention turning to Insurtech.
Okay, cool, that makes sense. And so then obviously there must be a role for the big guys, the IGs, the Suncorps. Like, what role do you as an industry voice, right, an industry influencer, what role do you hope that the larger insurers play in this kind of growth in Insurtech game?
Yeah, well, they've got the balance sheet, so they will ideally provide risk capital. The value chain, and I guess one of the reasons why, without boring the listeners too much, the value chain or the insurance industry is unique, which is in part why it's been protected and remained so unchanged for so long, is because of A, the barriers to entry, but B, the interdependent nature, of the industry. So even if you do set up as an Insurtech, as an MGA, you're still required to partner with a risk capital provider like an IAG, a seeding insurer, who still needs a reinsurance broker, who still needs a reinsurer. So yeah, whilst there's transformation and so on happening, you still need to partner with the IAGs of the world, and they have a really important role to play there.
Okay, cool. So I want to start to move this conversation a little bit into the investment space. So tell me, in the rest of the world, right, globally, you talked a little bit about the $7.4 billion being invested this year already versus, last year. Granted, I'm sure last year was pandemic-wise, right? So there was a little bit of a hit. But I think from what I saw as well, it was relatively similar to 2019, right? And so the expectation was 2020 was going to be the double year.
Yeah.
But really, it got hit by pandemic, and it's just been paused, and it looks like it's going again this year. So, where are some of the big success stories happening globally?
So there's different levels of success. It depends on how you define success. I mean, success through a VC's lens would be exit events. So we're seeing, all these liquidation events. So we're seeing a lot of IPOs. So Hippo IPO hasn't done incredibly well, I believe, but other IPOs have done quite well, like even Root and Lemonade. So them listing is deemed as success. Other kind of measures of success can be augmenting the industry and being able to prove that Insurtech has a real significant role to play in helping to augment the industry. If you look at natural catastrophes like the Brisbane floods, for example, in 2011, the insurance industry, the free market only picked up about 20 to 30% of that loss. Ideally, the taxpayer wouldn't have to pay as much of the residual, or that gap would be, the uninsured gap would be less. So we're seeing a lot of these really significant product innovation, and I think that's a measure of success, helping the industry to really innovate. So Flood Flash in the UK, helping the industry to insure and cover businesses for flood insurance where they otherwise wouldn't be able to get flood insurance. So providing consumers with claims payments within 24 hours of a flood event happening, that's success in my mind. And it's really helping to drive the industry forward. And I think it'll be successful for every part that they're trailblazing, and they're setting a really good standard for the incumbents to be able to follow. They're a bit more risk adverse, and if there's some trailblazers out there showing the way of how it can be done with product innovation, then hopefully that'll help others to be able to contribute to augmenting the pie, the portion that the insurance industry picks up.
Yeah, I think it's a really interesting point you bring up there. And I think, I've never really thought about it this way, but you bring up an element of kind of, I think, what we classically call impact investing, right? Like insurance isn't impact investing per se, or it's not sustainability investing per se. But I think the interesting part of the insurance product as a nature is that it is, or was, one of the original community-minded products, right? Like it is really about helping other people.
Exactly.
And now it seems like a lot of the big guys really treat it like a profit center. They treat it like a financial product. So how important is it for Insurtechs to continue to kind of hold that as a part of their core, or really like kind of, is it worth driving down the impact route, or, where do you see a lot of the Insurtechs landing over the next couple of years?
Yeah, I think that'd be crazy to not continue to have that as a part of the feature. So if there's 5 main macro areas for risk and social impact / protecting the environment and social risk is a big part of that. So we definitely see the definition of Insurtech augmenting to include social impact. You think about, I won't be able to mention the name because I don't think the deal's done yet, but our UK counterpart are back in Insurtech that's helping to provide more certainty to agricultural farmers in third world countries and emerging economies, so that basically providing them with insurance for their crops, so that it gives them more certainty on being able to deploy or get financing and deploy that capital to be able to run their businesses and so on, so that they can have a successful business and have that economy spread throughout their communities and so on. So that's social impact, and that's an Insurtech through and through. So social impact, Insurtech, the definition is definitely augmenting in itself.
Very cool. I forgot to mention that if anyone on the call, the attendees, have any questions, please use the Q&A function. I've got a screen up that will just show them as they pop up, and I can ask Simon them for you or on your behalf, especially if any of this is triggering questions. Cool. So the next thing I'm going to want to again, as I mentioned, want to move into a bit of the investment space. So look, as an investor, right, you guys run a fund. I think you said both locally here in Australia and globally. What do you guys look for? Like, what do you look for in a team? What do you look for in a product? What are you looking for when you're making an early stage investment?
So we only back, so for every 2 to 250 pitches we see, we'll back 3. So we generally are about quality over quantity, and we like, as we say, brilliant and bonkers ideas. We like outside the square ideas and so on. And we like to see really ambitious ideas. The problems that they're solving, as I mentioned, touched on earlier, if they can be expensive to solve, and popular and urgent, then that's generally a good profile of a problem, or mandatory to solve. In terms of the solution, we've gone through a bit of a phase where we've seen a lot of distribution innovation, and we're wanting to see a little bit more product innovation now. Your product, KOBA, is product innovation, as well as distribution innovation, which we really like, because I think there's a lot of opportunity to in the product innovation space. We like seeing low cost distribution, which often we see realized in, say, B2B2C models, whereby you can embed an experience or your product into a third party's technology, or a non-insurance brand's technology, which you can sometimes refer to as embedded insurance. Obviously, we like to see things that are defensible. So, I mean, they say that the only real competitive advantage is the first mover advantage, because everything else people can kind of eventually catch up on. But we do like to see other defensibility elements as well. Obviously, it's hard to go past the team and traction as well.
Okay. And then selfishly, what were the top 2 things, or 1 or 2 things, that drew you to KOBA?
We liked the fact that what you bring into market very much times in with the broader market shift. You look at the rate of growth of usage-based insurance and usage-based motor insurance globally, and I think it's between 80 and 100%. A rule of thumb with investing is, if you get in a market that's growing at 20% plus, all you got to do is get a horse in the race, and you know you're going to do okay. So 80 to 100%, that's obviously compelling. We've got a lot of conviction that the Australian market is shifting to a usage-based motor insurance model. The fact that we were able to test that thesis in the UK market and test the assumptions there, that's not often that you can have fly in on the coattails of a successful startup and deploy that thesis and that idea in a very similar market. And the experience that you've had in corporate land as well as in startup land is quite gives us strong conviction as well, and also Don and the rest of your team as well. So they're probably the main reasons. We like usage-based motor insurance, and you've created a really nice brand that we like as well.
Right. You know, we were working hard trying to.
In saying that, we invested before you created the brand. It's just nice to see that happen.
What did we originally call it? Jump insurance, I think is right. It was because my kids were just jumping up and down while you and I were talking on the phone one day, and we just needed a name to get it out there. But KOBA is much stronger. Kilometer, it's short. For those that don't know, within the brand space, In classic marketing, you can either come up with a name that is very intuitive and makes a lot of sense on what exactly your product does. In the UK, they call it by miles because you're, insurance by the mile. Or in the US, they call it Metro Mile because it's metropolitan internal mileage. So we call it, the other theory is that you could completely make up a word, right? Like, what is a Coca-Cola or a Pepsi? Like they're not really a thing until you give it meaning. And so we made up the word KOBA, which ultimately is short for kilometers-based insurance. If you take a couple of letters out of kilometers-based and put them together, you end up with KOBA. Is where we got to. I think we did a little bit of research. Some of the research we could find is that KOBA is the name of one of the monkeys in Planet of the Apes, and it's also a name of a car, a Toyota car as well. I think that's about all the things we could find. But yeah, look, it's fun, those types of branding projects and things like that. Okay, so I guess what are you looking for from the team? What are you looking forward to? What are your goals, short-term goals for KOBA in the next 12 to 18 months? What would you like them to hit? What would you like them to do? What is short-term, like immediate and short-term success in your mind?
Yeah, so usually in the first 6 to 12 months of an Insurtech's life, in particular an MGA model, it's more about the insurance metrics than the VC metrics. So it's more about, can you prove out the frequency and severity and make sure you get the pricing right and get that portfolio monitoring function right. So you've got your retrospective analysis at the end of every month of the performance of the portfolio, and yeah, tweaking the pricing and pulling the levers behind the scenes to eventually, as the sample gets bigger, demonstrate that you're able to put that downward pressure on the frequency compared to the industry benchmark, which is what, 13% or something, and obviously try and push out that black swan event as far as you can. So that's what we look for in the first 6 to 12 months. And then after that, the insurance metrics will continue to be vital and critical, but the growth starts to come into play, and that cost per acquisition or CAC is obviously comes into play more and more as it matures.
Very cool. All right, so we're closely coming to the end. I'm just scrolling through the attendees list. We've got some pretty serious insurance heavy hitters from some pretty big companies on this list.
Okay,
I'm speaking to initials LP, MN, TC. You guys got any good insurance-based questions that you can fly to Simon on where we should be going? Any hard-hitting questions? One question did pop up during the chat, which was, what's the minimum parcel amount for investment? This is not confirmed right now. It's to be confirmed over the next couple of days. What's the minimum parcel amount? And so what we're looking at is roughly $200 in the crowdfund, right? That's 2 shares at roughly $100 each, or 20 shares at $10 each. We haven't really kind of finalized the number quite yet. That's happening literally today. But $200 in the crowdfund. To date, we've already raised $600,000 from a number of different angel investors and funds like Simon's, where the minimum parcel size at that point, I think when the very first week was 10 or 25 grand was the smallest that we were taking, and then and now it's considerably higher than that. But with the crowdfund, everyone coming in together, one of the kind of key hopes is that not only do we get a lot of great people in, a lot of experienced people in, people that make sure we can bring the customer's voice into the business early to really make sure we're designing the right products and headed in the right direction. So in that sense, the crowdfund as a whole, I think what we're actually hoping for as a maximum raise that we're targeting is about $1 million total, which then means as small as $200 per person. All right. Here's a good question. So what's Simon's thoughts on how embedded insurance will unfold in Asia Pacific? So for those that don't know, embedded insurance effectively is the insurance product being embedded into third-party distribution channels. The best way to think about it is kind of like travel insurance when you buy airplane tickets. But the idea of embedded insurance can go across many different platforms and many different products. And the question is, where do you think that's going to go in APAC, and maybe even some good ideas? How do you think KOBA should be able to do it?
Oh, for what it's worth. Yeah, I think we will start to see a lot more insurance products distributed through non-insurance brands, through the brands that we love and deal with every day, as opposed to the insurance brands. Obviously, there's a regulation consideration with the deferred sales model and so on, but yeah, the feedback I'm getting from ASIC and other sources as well, even for the non-exempt lines, there seems to be a way around it. We've seen a fintech come into the Australian market a few months ago and launch a product, an embedded insurance product with one of our biggest retailers, and they've been able to navigate that by literally not calling it insurance, calling it something else, which is a bit interesting. In terms of Asia, they're obviously a lot more focused on the micro insurances. And we do know that the embedded insurance works quite well for micro insurance. So yeah, I've got high hopes for it in the Asian market. We get to see a portfolio company looking at the Asian market to scale into. We do have resources on the ground over there that can help facilitate that replication. So maybe something we can look at. Obviously, KOBA, that's transferable to that market as well. Yeah, I don't have too many other insights at the moment.
Okay, cool. Another question is, where do you see the kilometers-based insurance industry going in the long term? Right? Will it be ubiquitous? Will everyone be using it? How will it change over time? And maybe even, possibly talk about the potential threat in autonomous vehicles and what that means for pay per kilometer insurance.
Yeah, so I've written a blog, I don't know, a few months ago that shows, and in that I've pulled out a graph from a Swiss Re article from last year that shows the forecast of GWP for motor vehicle insurance beyond 2030, or up to 2030 and beyond, and it starts to come right off. And I think it's at least a fifth. It's at least 20% of the 4.5 trillion in global premium is motor vehicle insurance, and which is probably why we're seeing a lot of the Australian brands, even like the motor clubs and so on, looking to differentiate and do other things outside of motor, because they know that their bread and butter is kind of coming off a little bit in the future. So yeah, it makes sense that the premium is going to be reduced because of autonomous cars. Yeah, I'm lucky enough to drive in a car that has an autopilot function, and it's amazing. And the severity of, the frequency of losses in that type of car is significantly less than along with other cars that are similar than some of the more traditional cars, combustion engines and so on. So yeah, it's obviously the way that the market is going. We also know the market is going in a direction whereby it's more about leasing than ownership. So part of the transaction, which is again about embedded insurance, of being able to jump in a vehicle and go from A to B, is the fee for transportation, mobility, but it will also encompass the insurance component, whatever that looks like. So shifting towards more leasing than ownership, I think will put downward pressure on that premium pool as well.
So yeah, I'll probably add a bit to that too. I think what's really interesting, and one of the things that KOBA is really kind of placing a bet on, is the future of connected cars, right? And the thing to think about in the simplest for connected cars for me is two things. One, as soon as the car is connected to the internet and connected up to, to receive data and send data, because if you think about it, your car today, it creates data, right? It's got thousands of sensors, but the data can't go anywhere. So it effectively deletes itself after a day or two, and then it just creates new ones, right? And so it's for monitoring and self-maintenance. As soon as that data can leave and be stored by the car manufacturer, two things happen. One is that the car manufacturer all of a sudden can build a customer relationship or a loyalty program that they've never been able to do before, because effectively everything stops at the dealership, right? And then the car manufacturer can't have that conversation. I think the other side of it is that with the data passing back and forth, they can now fundamentally make cars smarter. They can fundamentally make cars safer, because what they can do is they can send a software update that makes your car again, bad example, but really highly illustrative, they can put a limit on the number, on the speed that you could go. Maybe it is 500 kilometers an hour, then it's 400, then 300, then 200, 100, whatever it is. The passing of data between the car and the manufacturer, these types of things start to happen. Now, obviously, they're not going to limit your speed, right? But I think some of the interesting stats that Tesla's put out in the last couple of years is that immediately, as soon as they started passing data back and forth, their accident rate went from something like 1 in 3 million miles driven to 1 in 6 million miles driven, simply because they could make the cars smarter and safer, right? And so what that inherently does is that it will put downward pressure on the premium. Pay-per-kilometer will become a really interesting option. Accidents, fewer and fewer accidents will happen. But it's my personal belief, and our belief here at KOBA, that autonomous vehicles is probably a good 20 to 25 years away. Because the reality is twofold. One is, to date, right now in Australia, there's give or take 20 million cars on the road. In 10 years' time, there's still going to be, give or take, 15 million cars on the road that aren't pre-connected to the internet, right? So until we can wash out all of the cars that are pre-connected to the internet, putting fully autonomous cars on the public roads is going to be something of a game, right? Because you're going to have some that do and some that don't. There is definitely going to be autonomous vehicles on closed economies, like an airport or a military base, or maybe even an island. Like, you'd love to see a small island with lots of golf carts that are autonomous, right? Things that can be controlled. But in the public roads, it's going to be much harder to do that. And I think the last point about it is the car manufacturers are car manufacturers. They're not insurance companies. So what will end up happening as fully autonomous vehicles come, the question will start to be, who holds the liability? And the problem is that the car manufacturers are car manufacturers, not insurance companies. So they're not going to want to hold the full liability of their product for the length and the lifetime of the car. So an entire organizational and industry-wide change is going to have to happen before the car manufacturer is willing to take the full liability of the product in its lifetime.
Yeah, that's fair.
And that's going to be a really big hurdle to jump over. And again, in private and closed economies, sure, not an issue. Yeah. But on the public roads, it's going to be a little bit harder. So therefore, giving us a strong 20 to 30 years, of hay to make, where pay-per-kilometer will most likely, at least our hope, becomes the norm. Cool. Next question. Some insurers overseas are using car telemetrics to price risk and encourage positive consumer behavior. Are there plans to do this? And what was the strategic focus on kilometers? Oh, okay. So I can answer that. I'll answer that. So look, it's interesting. Right? If you put the premium on behavior, then what ends up happening is that it becomes a very insurer-centric model, because the insurer wants to find safer drivers because they want to find people who get in less accidents so they can make more profit. It's not a metric or a payment model that has the customer at its heart and customer to determine what they're willing to pay. With a kilometers-based program, we simply set the number and put the control back into the consumer's hand or the driver's hand and says, if you want to pay more or less this month, use your car less, right? Use your car more, whatever it happens to be. And that's also a very easy marketing proposition for them to grab hold of. Like, I only pay for what I use, as opposed to, I'm only going to pay this month for as safe as I drove this month versus last month. And I guess the question is, did you drive safer or worse than last month? And they can give you a score, but then there's an arbitrary score. And then what ends up, what we saw here with UbiCar and Insure the Box in the last couple of years is you actually get people trying to game the system who go, I want a cheaper price, therefore I'm going to just drive safer. But the reality is that the reason they generally have a higher price is because they're less safe. And by them trying to drive safer, they actually tend to get in more accidents, they tend to get charged wrong, and they tend to take on the long level of risk. So as a business, the way that we kind of structured it is that we are only going to use the GPS and the location data to charge premium. And so that simply understands how far you've driven. That's the only thing that's going to be used in order to change premium. The rest of the driving behavior data that we have access to, we're going to use in order to make better personalized services and experiences, right? Things like a pothole tracker, or a greenhouse gas emissions tracker, or a driving safety report card that simply tells you how good or bad you're driving. We believe that it's more of a teach a man or woman to fish rather than give them a fish kind of situation. In which case, like with your iWatch, Your iWatch tells you how many steps you've taken, tells you your blood pressure, tells you your heart rate, things like that. It doesn't tell you that you're out of shape and you need to go to the gym in order to feel better, but it gives you the data from which you can make a better decision on what you need to do. And in that sense, we're going to tell people this is how often you're speeding, this is how often you use your phone while you're driving, and then that's for you as the driver to internalize and figure out how to become a safer driver. And in that sense, again, touching on some data privacy things, is we ultimately believe that the data belongs to the consumer, right? It's their data to use, it's their data to unlock. If they get in an accident and it's required or being asked for by a lawyer from the third party, it's for the customer to decide whether they share the data or not. Now, we want to believe that people will likely share it if they're not at fault. The data that we have can definitely help people understand and understand where the blame or the problem lies, right? If there's some examples out of the UK where Buy Miles customers were accused at rear-ending someone, right, and driving into someone, where in fact they were able to show the driving behavioral data and say, hey, actually, look, if you look here, I was stopped, and what was happening here is the previous 5 seconds beforehand, we were decelerating, trying to avoid, right? And you can show very quickly that nothing happened. There was also a case where someone claimed for whiplash, and they said, well, at the point of impact, we were only going 5Ks. And in which case, whiplash is very hard to create at going at 5Ks. And the data that we have is, again, for the consumer to use in order to kind of help them personalize their insurance experience and ultimately become safer.
Yeah, that's a really good point. We always encourage the startups to take a very scientific approach. So build the hypothesis and test and learn. And there's a lot of data out there and a lot of pay how you drive, we call it, attempts that have failed, and to not learn from that would be a little bit silly potentially. So yeah, sounds like a good approach, mate.
Good, thank you. Another question, this is a little bit off this topic, but we can go into it, which is also I'd like to know how the physical car monitoring works. So it works in kind of two ways. The first and primary way with our customers at the moment is that when you buy a policy, everyone gets a small device which is sent to them. The device it plugs into the onboard diagnostics port. Looks like this. It's got a small plug. I think it's about 16 points in the plug. It's no more than kind of a centimeter by 3 centimeters by 1 centimeter. You plug it underneath the dashboard, underneath the steering wheel. Genuinely, the hardest thing about plugging it in is finding the plug, which you kind of have to stick your head underneath the steering column right by the pedals, but it's there. In a couple of makes and models, it's behind a panel, but it's easy because there's a flap. Every car after 2006 and younger, so the last 16 years, has the OBD port in it. There's a few cars, makes and models that don't have it in now going forward, but those are the ones that are pre-connected to the internet. In which case, things like a Tesla or there's some Mercedes. Next year, the Toyota or the Toyota Yaris and the Ford Outlander, Mitsubishi Outlander are all being launched pre-connected to the internet, so they don't have the plug. But in which case, we're hoping to be able to connect directly to the car manufacturer's data set. And that's one of the big deliverables this year, is to kind of shop around town and talk to the car manufacturers and get access to their data. Tesla, Mercedes, and BMW have open APIs, so we can hit those pretty quickly. And then the other guys will be a bit of a data discussion on whether we can hit them and use it to continue to drive our product. So the device is pretty easy to plug in. There are a bunch of alerts if it's plugged in or not plugged in. The policy actually becomes invalid if the device is not plugged in for a couple of days consecutively or 7 days total. And then from there, inside the device, there's a SIM card, which uses the cellular network, which sends the data, car engine codes, mileage, and things like that up into the cloud, which then connects to the app. Everything's kept, stored, securely. We have a partnership with AWS and use a couple of third parties around our hosting infrastructure and data security to make sure that we are rock solid. All right, cool. There's about 10 minutes to go. If anyone has any more questions, quickly now jump on, add them in. We can ask them to Simon. I can take them either way. But if there's no more questions, I guess we can give you guys back some time today. Thank you all for joining. It's been super helpful. Simon, thank you very much for your information about Insurtech. Thank you for information about global trends. Anything else you want to kind of cover off or close on?
No, it's good. Looking forward to the launch of KOBA. And yeah, thanks for having me. It's been good to participate, and looking forward to the next session.
Perfect. And just on that, so the final session is at roughly the same time next week on Wednesday. The last session will probably be around virtual, on how to actually invest. For those people that haven't invested before, there's a small process to go through. It's, a sign up form, connecting bank accounts, digitally signing documents, escrowing money. There's some legal stuff that falls in between on, when you can pull it back, how long you have to decide. And next week we'll go through that in a pretty quick half an hour. But again, thank you everyone for joining. We will be sending the video out to anyone that wants a copy, or to people that missed. Again, we're really proud and really happy to have everyone join us on the journey. Hoping that you guys can all invest next week when we turn on the offer. All right, bud. Thanks so much, Simon. Everyone else, thank you for attending. Talk to you soon.
Cheers. Bye.
Guys, bye.